We send a notification at 10 a.m. This number right here, volume. If it's under 100%, under 110%, stay out of the market. Trading is going to suck. And this sucks, man. I mean, this sucks because percentage gain, max gain, God mode exit, which means like you're a perfect trader. For the top 3 alerts, you're not even getting 100% combined. I mean, that sucks. That sucks. But that's what we expect when volume is so low. You are not going to have incredible price action that's actually worth trading unless Wall Street is participating aggressively. And their participation means they're sweeping lots of option contracts. They didn't, and this entire day, 437, 438. I mean, practically, right? I mean, look at this. Ping pong, bing bong the whole time. Boop, 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 boop. Terrible. But if you have this form of mental illness that most of us in the group have, well, we love trading, love trading. You followed the strategy, right? Bears above the blue, bulls below the blue. You actually made money on like almost every one. Like, look at this. Below the blue, below the blue. 50% max gain. 70% max gain. Bulls below the blue. And that max gain that's here, baby. Look how clean this is. All right, we come down and we rip back up. You get a full strike, $1.50. Look what happens when we get back to the blue line. See these little red things? They're kind of difficult to see. We're going to have to change that. Those are red. We call them florbs, which stands for flow orb. And if it's red, it just means, hey, it's a smaller bearish trade. That could mean buying puts. That could mean selling calls. It happens extremely fast. I don't know how anyone uses option flow and just like looks at it. You can't do it. You can't do that and then think about it and then make a trade. That's why rigged is just better, superior. So we come up. You've moved up pretty high. This is above the blue, almost at 438. You're 11 cents below it. And you get, 74%. I mean, that's riding it down to about here. A little bit of a bounce. Probably would have gotten scared and gotten out there. We get close to 436. Never going to act like a good trader. Obviously, IQ points a little bit left, like the middle of the curve. Probably would have sold some right here. I definitely would have sold it all right here. Because the view is, you're in this trade. Okay, I'm up a little bit. Okay, I'm maybe up 10%. Probably up 5% right here. If it goes against me, keeps going higher, I'll get out, stop at break even. But we get down here, and the thing to look at is if we don't break 436, if we don't just nuke below it right away, I'm scared. I'm terrified. I mean, look at this candle. That's just a big move up, right? This white one right here. That's just a big bounce. You're in this. Okay, you're up like 10, 15%. Okay, we're back to break even-ish, maybe up 5%. It starts to go. Once I break 400, first, you're looking at 437. But since it nukes right below it, okay, you have finger on the trigger the closer you get to 436. Now, if you're a complete base Chad and you can hold through this and down to here, that's fine. But very similar to SPY, actually identical. You open halfway in between 437.43 and you go down, basically strike and a half, 2 strikes, we'll call it. Just going to swap over really quickly so you can see how rigged the stock market is. I mean, they opened it at 510.43. So SPY and QQQ, the only options really that are 0 DTE, open at the exact same cent level. And price action's a little bit different to start, but where did we bottom? Strike and a half down, 2 strikes down. It's so rigged. But it's important to kind of realize this, see it, because then when you see it, you can understand hey, we're probably not going to have anything super tradable today, right? One more time. We open same exact cent level, and we go down 2 strikes, 2 red lines, and we just chill. The rest of this, not really anything, right? Okay, you could have taken this. This is a bear above, 48%. And that's good because, look, this is quick, right? You get here, it nukes down, you're at 40-something%. Hey, it starts moving back up to 437. Get out of the trade. Get out of it. This is at the blue. We don't like it. This one right here, you're starting to move up. I mean, you could have taken it. It probably made some money at some point in time. But mean reversion, bears above the blue, bulls below the blue. You're not taking this because we're above. You're not taking this. You're not taking this. I mean, this bear, you made a little bit, 16%. But when we get to this blue line, we don't nuke it. Get out. This was okay. I think we took this trade. And it's off the screen. 111%, 84%. Do not trade if PS is negative. Well, PS is positive, small trade size. Buy it out of the money. You're buying the 438p, 21 cents out of the money. And you get 100% in 35 minutes, but this was awful. I mean, this price action towards the end of the day was absolutely crazy. It was nuke, rip, nuke, rip, nuke, rip. We don't like that. Overall, remember, 10 a.m., tradability notification. This is for rigged members. You can join $20 for 20 days. Take the rig pill, change your life, or possibly, most likely, probably ruin it. Don't even know what we were talking about, but you don't want to trade this. I mean, this is terrible. This is the whole day at 438, 437. CPI is tomorrow. So typically when there's a big known market thing, inflation, this, that, whatever, the day before is fairly muted. Now that happens before the market opens. So who really knows? Who really cares? But this is kind of funny because we opened at 487.43 and we closed at 437.36. It's a whole day of nothing. That's a whole day of Wall Street rigging the market because that's just how it is. Have a great day, everyone. We'll see you all tomorrow. CPI's pre-market. We could get some action. Volume equals tradability. If there's high volume, lock in. Low volume like this today, I don't know what you guys like to do, but you should probably go do that because this was bad.